If you're a tenant in today's market looking for accommodation, well, good luck finding something to rent. And if you're a home buyer or investor, by now you'd realise the market's on the move again. Now, regular listeners to this podcast would know that once a week I conduct a Property Insiders video chat with Dr. Andrew Wilson, Australia's leading housing economist. And today's podcast is the audio of a recent episode where we discussed his thoughts about the federal budget and if it offered any relief for our housing markets. We also discuss the tight rental markets, building approval numbers, as well as the booming auction clearance results. I'm sure you're going to benefit from today's chat because those who've been following Dr. Wilson's commentary would know he's been very accurate with his forecasts. So, let's get on with the show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment, and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
If you're a tenant in the market for accommodation, good luck finding something to rent. And if you're a home buyer or investor, by now you'd realise the market's on the move again. In today's Property Insider chat, I discuss the current rental markets with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of my housing market. We also talk about the recent federal budget and if it offers any relief at all for home buyers and tenants. We're also going to discuss the latest building approval figures as well as the booming auction clearance results. Hi, Andrew.
Yeah, good day, Michael. And we've got plenty to discuss today. And of course, I guess we start off with the budget last week, which was a bit of a ho-hum in terms of the housing market. And by that, I mean private housing market. But no surprise there because I think we're way past any serious government action that will moderate what are clearly disturbing conditions, particularly in the rental market.
Well, one of its suggestions was let's start this build-to-rent sector in Australia that's doing so well overseas. And they're going to offer large corporations that are going to build 50 or more apartments in a tower, hold them over 10 years, and offer potential tenants at least 3-year leases. They're going to offer them tax incentives. But what we found recently, the two completed developments by Mirvac, is that they bring them onto the market at around 25% more expensive than currently other apartments are on the market because they're providing good accommodation. I guess this is going to free up other accommodation, but the numbers they're talking about are not going to provide any affordable accommodation like's required at the moment.
Well, that's right, Michael. And the whole point to build to rent is that it has to be supported by governments because tax, particularly that's involved if you are a large scale investor relying on rental incomes, makes it unprofitable. So the only way these projects work is if governments give significant tax concessions to the big end of town.
Who's paying for those, Andrew?
Well, that's right. I mean, Mum and Dad pay for those. Joe and Joanna Public pay for those. And that's the point. You can sort of get, if you want really a large-scale commitment to build to rent, you have to have a large-scale commitment to providing big corporations with taxpayer funds, which could be just going directly into building public housing. And because obviously these are projects that are designed to make a profit and a significant profit. Let's not get too carried away with the sort of altruistic attitude of developers. And the only way they can make a profit with build to rent is with government assistance, and that means using taxpayer funds. And as I said, you might as well just be going direct and building public housing with those funds. And the point is, when we look at the increased incentives that were offered in the budget, they come down to $10 million a year. It's just a drop in the ocean in terms of its impact on the imbalances we have in particularly our rental market, our rental markets currently. But I think it's just, again, a headline. So, we're doing something. But when you're looking, you don't have to look too deeply. You realise it's going to have absolutely no effect on the big picture. And that is if we have way too many people and way too few houses to house them. What works overseas in different housing market environments, different taxation environments, we shouldn't point to being a proof that these projects would be successful. And I'm not sure if we had a larger scale with build-to-rent projects that they'd be embraced by the public anyway.
Well, there were also a couple of things where they fiddled around the edges with the home guarantee scheme, increased funding for homelessness, welfare recipients. They got $15 a week, Andrew. That's not going to change this dire situation we've got in our housing markets.
Well, I think, and we shouldn't be surprised, Michael, and not just the Labor government. I think government's really, in these circumstances where rents are skyrocketing, and we will continue to see rents increasing generally, not just the rents for new listings, but this will work its way through the system to people who have leases in existing tenancies. Agents and landlords will take note, of course, of what new listings are doing. And when those leases expire and have to be renewed, they will increase their rents appropriately. So we've still got a long way to run in terms of higher rents generally, not just with new listings. And of course, unfortunately, this is going to have an impact on inflation down the track, because our rental markets are significant in terms of how they influence inflation, the depth of rental properties as a proportion of our housing markets. So there is some way to go here. And I think what the Labor government is doing clearly is looking after those more marginalised in terms of lower income earners, how they're struggling with their rents. So those that are on, existing welfare payment recipients will get an extra up to $15 a week, as you mentioned, Michael, in rent relief, also on top of some other increases in general welfare payments, such as Job Seeker and Austudy. So that will help, but not by much when we look at how rents are increasing. We've also seen the government provide more funding for public housing through their NHFIC funding. The fund now has been increased up to 7.5 million. And as you mentioned, Michael, some, extensions to the home guarantee scheme, which means you can purchase a property with just 5% deposit. It's extending that to friends, guardians and siblings, other family members, to be part of that group, to own the property and to get that, to be eligible for the scheme. And what I think is a good part of that new eligibility criteria is that previous homeowners, because of course that home guarantee scheme is for first home buyers, but if you've been a previous homeowner but have been renting for the past 10 years, you're also eligible. So I think that's a good move, and help to get new entrants into our housing markets, which, with higher rent and higher prices now, is going to become more problematic, and homelessness services also appropriately increased as well. So looking after the marginalised there, Michael, which I think is a positive move, but really nothing at all for the private sector.
Well, one of the things in the budget was the increased immigration intake to around 300,000 a year now. But when you take into account not just the permanent residents, but temporary residents, visa holders, students, the suggestion was we could have 1.5 million people coming to Australia, more people coming to Australia in the next 3 years. But we're just not building enough accommodation for this skyrocketing demand. And that was again confirmed in the latest building approval figures, Andrew.
Yeah, no joy there. And there won't be joy, I think, in terms of matching what are extraordinary numbers, as you mentioned, Michael, in terms of migration coming in, and they're going to have to find somewhere to live. Good luck with that. But home building approvals were down by 0.2% over March. That's the seasonally adjusted number. Houses down 2.8%. The volatile unit market, which of course we see bounce around from month to month, was up by 5.6%, but that did follow a very big fall over the February. And the context clearly is that total approvals are down by 18.3% this year compared to the same period last year. So we're still declining. And when we look at the trends, you can see the trends are clearly now falling sharply away, the longer term trends. And, as you mentioned, in the context of these remarkable migration numbers, this is very sobering news and can only really mean higher prices and higher rents. And we look over the year, only the Brisbane market, Michael, has recorded higher numbers of building approvals for dwellings, but other capital cities have fallen sharply, led by Sydney, which of course is the leading housing market revivalist at the moment with prices growth. But its new building is down by 40% this year so far compared to the same period last year.
That's a big change, isn't it? Now, you brought out recently your April rental report, and even though vacancy rates have crept up a little bit, new tenants are still having to pay more rent, aren't they?
Yes, Michael, this was the April rent report. April's usually a quieter month for rental activity because April is a big holiday month. We have Easter and Anzac Day. And that does distract tenants and landlords. And we typically see vacancy rates rise just because of those distractions over April. And that, of course, can mean some relief for rents. But unfortunately, there was no relief for tenants in terms of rent increases. We now have, when we look at the capital city, asking rents, this is for new tenancies, of course, over April. We've now seen what was the trend finalising itself in terms of the difference between units and houses in Sydney. And median rents in Sydney for a house, asking rents are now $700 a week, Michael, with rents for units now matching that at $700 a week. And we can see the gap really narrowing everywhere between house rents and unit rents as, of course, tenants are forced to look for more affordable options. So more demand there with reduced supply, as we've been discussing, only means higher rents. And we're seeing that point where I think it's not going to be too long where most capitals do have unit rents at the same level as house rents. And over the month, notwithstanding that's a quieter, distracted holiday month, we still saw increases in house rents. Melbourne house rents up 3.8% over the month, Michael. But Melbourne's still the most affordable rental market for houses. And a lot of that is coming from a lower base because of the strong migration out of Melbourne during COVID. It did mean there was more supply and less demand for rental properties, houses particularly, as well as units. And that's Melbourne sort of in catch-up mode now, up by 3.8% over the month for houses. Sydney and Brisbane and Perth were also up slightly over the month for house rents, but the Sydney unit rents, they really increased strongly over April, up by 3.3%. Brisbane also up by 1.9% and Perth up 2.9%. These are very big numbers for monthly increases, Michael, and it just reiterates that even during a holiday month, there's no real relief. And as we'll see, we know that actually vacancy rates also ease as we expected over April, but the annual data really is sobering. Sydney unit rents up now 40% over the past year, Michael. Of course, coming from a low base, we know that because there was higher supply and low demand a year ago in the Sydney unit rental market, which reflected those closed borders, and it was all about those inner suburban areas, but up 40% over the year. Melbourne up 25%, similar circumstances to Sydney with borders reopening. But Brisbane continues to be a very strong annual performer with house rents and unit rents up by over 20% over the past year. So it's across the board, Michael, in the major capitals, and it really is sobering news. And as you mentioned, vacancy rates were a little higher over April, which is what we expect with those holiday distractions, but they're still very low. We're talking, Sydney up, but just still at 1.1%. Melbourne had the highest increase in vacancy rates and still has the highest vacancy rates for units, but it's at 1.5%, Michael. So it's still a very tight rate there. Anything under 2% clearly is in favour of landlords and higher rents. So unfortunately, no real joy there for tenants, and some good news for landlords going forward to offset those higher interest rates. We're certainly seeing high rents coming through. And as I mentioned before, I think it's inevitable we're going to see that those increase in rents work their way through the whole rental market eventually, which is not good news because it means the lags that are involved because of leases, etc., means that we've really got all this inflation in the gun to come through, which would be sobering for the RBA.
I can see that. But it's actually been something that's been creeping up for a while. It's not just migration. Sure, we're getting more people requiring accommodation at the moment, but over COVID, there was this craving for space and fewer people were living in each place. We wanted to have more space and live more on our own. But the decline in average household size in Australia was already there before the pandemic. And the Reserve Bank recently found out that just a 1 percentage point decline in the average household size, which happened over the last couple of years, would just on its own require 120,000 new homes, despite requiring no more numbers in our population. So that also puts significant pressure on our markets. I wonder, Andrew, whether moving forward people are going to be getting back to sharing houses, sharing accommodation, just to make it more affordable.
Well, that's right, Michael. I think another one of the questionable analytical measures from the Reserve Bank, and gee, they've got a few of those that have proven to be problematic at best, has been blaming the rental market issues on changes in household size. And I think it's just a clear demand and supply problem here. We're going to get we have surging demand now from migration and we've just underbuilt for the best part of 5 or 6 years. And the Reserve Bank can put their hand up to that because they were part of the investor credit squeeze back in 2016 and through to 2018, which clearly pushed investors out of the market, and which is one of the reasons why I believe we have too few investment properties now. But we won't hear too much about that household size scenario because we're already starting to see them backtrack there because household sizes, as you suggested, are increasing. And we have no relief in the rental market now. So nice try, guys, but not this time.
I just wanted to interrupt this week's Property Insider chat to remind you that this is not specific property advice because we don't know your personal circumstances. But if, like many property investors, you're wondering what's the right thing to do at present, should you buy, should you sell, should you wait, you can trust the team at Metropole to provide you with direction, guidance and wealth-producing results. Whether you're a beginner or an experienced investor, at times like we're currently experiencing, you need an advisor who takes a holistic approach to your wealth creation, and that's exactly what you get from the multi-award-winning team at Metropole. We help our clients safely grow, protect and pass on their wealth to future generations through a range of services: strategic property advice, buyer's agency, wealth advisory, property management, renovations and development management services. Go to metropole.com.au and explore your options with the complimentary Clarity consultation. Well, the weekend auction markets seem to still be strong, just shrugging off that interest rate rise at the beginning of the month, Andrew.
Yes, I'm not sure, other than sentiment, that's the what interest rate rise from the public out there to some degree, but we can always use that as some sort of a catch for motivation from week to week when we do get changes to interest rates. But we've got to understand that the decisions made on auction markets are really have been made for quite some time, other than perhaps some sentiment where people are wavering one way or the other. I don't think it affects too much, to be quite honest. But we had another big weekend of auctions, Michael. We're well and truly into the back end of the autumn selling season now. We've got our holiday distractions behind us, so the market's fully focused. And remarkable results on the weekend had all capital cities reporting clearance rates above 70%. Can you believe that, Michael? So this is sort of across the board in terms of a revival in housing markets. It's not just Sydney, it's not just Melbourne. It's now all capital cities have had clearance rates above 70%. Dare we mention that B word, which is boom, but we're now getting close to those 80% results in Melbourne and Sydney. So we can say they're near boom time results. And as I mentioned, all capitals are now reporting clearance rates above 70%, and not just at 70 or just above, Michael. They're actually close to 80%. And auction numbers were holding up around about the same, a few more in Sydney compared to the previous weekend. Sydney had a clearance rate of 78.5%, a little bit lower than the weekend before, but almost the same. Similarly, Melbourne, a little bit lower with similar auction numbers, 76.2%. Brisbane's had a bit of a pickup over recent weekends, Michael. It had another 70% plus clearance rate on steady listing numbers. Adelaide, as usual, 80% plus. It keeps on tracking at 80%, but a lot fewer auctions in Adelaide compared to the previous weekend. And Canberra has also started to pick up, Michael. I think it's catching a little bit of that Sydney energy, the Canberra housing market, and it recorded another 70% clearance rate. That's back-to-back results when it's really been tracking around 60% for most of the year so far. So again, we sort of emphasise that when we look at a year ago, we're seeing auction clearance rates well above where they were a year ago. And of course, that's when we did have our first interest rate increase for 10 years. So maybe that did have an effect on the market, which I'm sure it did because of the wave of negative predictions in regard to higher interest rates. But Sydney and Melbourne are clearly higher than where they were a year ago. Similarly, Brisbane, Adelaide is higher so far this over May compared to May last year, and also Canberra. So all our capital city markets are tracking higher over May so far, Michael, compared to where they were a year ago. And it is remarkable that these auction clearance rates are now starting to head towards 80%. So will we see 80% over coming weekends? Perhaps we will, because this is actually a stronger part of the year, the back end of the autumn selling season into June. So maybe we can expect even stronger clearance rates, but notwithstanding that, these rates are very much for sellers, and that's why we're seeing prices rise. We shouldn't be surprised, Michael.
Well, we've seen increased buyer confidence, but clearly we're also seeing increased seller confidence.
Yes.
I remember in the middle of last year, sellers, particularly in Sydney, were withdrawing their properties from auction. Remember a week before auction, they didn't see that there was going to be much interest and they pulled them off the market. That's not happening at the moment, is it?
No, it's not, Michael. And we're certainly seeing a concerted and consolidating recovery now across the board in all capitals. Despite those higher interest rates, it does reflect a booming economy with wages rising strongly, the lowest unemployment rate basically on record, and plenty of confidence around there. And of course, the one negative is those poor doomsayers that look pretty silly at the moment, Michael, don't they?
Yes, they do. Well, they've gone quiet. The bears have gone back to hibernate in their cave. And Andrew, I think we got through one show without discussing what's going to happen to interest rates. So maybe we'll discuss that when we catch up next week, Andrew.
Yeah, we'll do that. Next week, Michael, we might have a look at how the regions are performing as well. I think that could be interesting.
That would be very interesting to see after they boomed during the COVID pandemic.
Yes.
Thanks a lot. Catch up with you next week.
Thanks, Michael. Bye now.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
Is fear holding you back in your career? Maybe it's in your relationships. Could be in your investment journey. Or maybe fear is stopping you achieving your dreams. Now, if this is the case, you're in good company. So I'd like to have a little chat with you in this mindset session about the common fears that hold people back. But before I start, I guess I should say you've probably had lots of people give you advice on getting past your fears, suggest that if you can break the shackles of fear, you're going to be unstoppable. Now, that's all well and good. It is important to master your fears in order to feel free. And you've got to master your fears to get things done. But I also want to tell you that a world without fear would be simultaneously more dangerous, less rewarding. I don't know, just plain flat. So given that we've spent so much time wishing that our fears would go away, so that we can get on with things, let's first of all have a quick look at why you may actually want to cultivate fear as a friend, not as an enemy. You see, fear is a great guide to opportunity. Think about it. Fear often shows you what's important, what matters to you. And if you didn't have fear to guide you, maybe you wouldn't know what's important. So maybe fear isn't that bad after all. And of course, fear motivates us into action. The way I see it, way back years ago, our ancestors who didn't run away in fear when they saw a saber-toothed tiger running at them simply just didn't survive to reproduce. So fear does call action into being, doesn't it? Now, most of us don't face serious physical threats from hungry tigers every day, but we do face them from, crazy bosses, angry clients, the fear of public speaking. Now, that's very common, isn't it? Now, in those cases, our fear is still motivating us to do something, to enhance our chances of survival. The trick is to be able to transcend our primitive lizard brain and do something useful. Running away or throwing a spear may work on tigers. It doesn't actually work too well on your bus, does it? So what I'm trying to say is fear does have some uses because it actually lets you know that you're alive. That's why we like roller coasters. Anyway, I do, because they scare us, mostly in a safe way. Same with suspense movies and thrillers. So, yes, you do have to have some fear in life. But let's go through 9 of the common fears that could be holding you back from achieving what you deserve in life. And the first one I'd like to discuss is the fear of rejection, because many people avoid entering relationships or try to meet new people due to the fear of rejection. Whether you've got a fear of your boss declining a request for you to get a raise, or a fear that that attractive person won't go out on a date with you, don't let the fear of rejection hold you back. Do it anyway. Of course, a big fear is the fear of failure. One of the top fears in the world is the fear of failure. Many people just won't try anything unless they're confident they can win. Failure is a normal part of our life. You've heard me say it over and over again in these sessions that I'm a real success at failing. I've just gotten up one more time, because failure will similarly help you find your eventual success. People are also scared of uncertainty. They've got the fear of uncertainty, and it prevents them from trying something different. They sometimes think, what if I wouldn't like it? This fear can prevent you from trying new things or doing things in a different way than you've always done them. As you see, I'm working through the common fears to see which of those may be affecting you and holding you back. If you talk about relationships, it's sometimes the fear of loneliness. Sometimes people stay in bad relationships or resist living alone because of their fear of loneliness. Learning how to tolerate feeling lonely and finding ways to keep yourself company could help you manage to get over loneliness. Of course, the big one's the fear of change. We don't like change, but in this rapidly changing world, it's something you've got to get used to. Many people resist change. Fear of change causes some people to become stagnant, and they miss out on a lot of the really great opportunities in life. Big one's the fear of being judged. People worry that other people will think negatively of them, so they shy away from social opportunities or chances to advance their career. Now, people who adopt this fear, the fear of being judged, they often exaggerate how other people are going to perceive them. They think people are going to think negatively of them, talk behind their back, and they often underestimate their ability to tolerate not being well received by others. Let me put it this way. What other people think of you is none of your business. Clearly, another fear is the fear of something bad happening. Bad things happen to us all the time, though. It's inevitable. However, when people constantly fear something bad's going to happen, it often restricts their activities. They may avoid doing lots of things that they should be doing, or going to certain places, or taking on investments. Don't be scared of bad things happening. Do your homework, do your research, get on with it. Of course, another fear is the fear of getting hurt. None of us like getting hurt. I mean, if you didn't mind getting hurt, you wouldn't look both sides before you cross the road. However, a big fear of being emotionally hurt often stops people getting into the right sort of relationships or avoiding friendships or keeping family at arm's length. So think about what you're missing out on. Think about how realistic your fears are. But the big fear I come across with business people, entrepreneurs and investors, still said with the very, very successful investors we spend time with every year at Wealth Retreat, is the fear of inadequacy. It's a fear that all people seem to share, that feeling that we're just not good enough. And that allows us to pass up opportunities or decline the opportunity to go ahead and do things because you think you're inadequate or you don't deserve it. Often people overcompensate for their fears by trying to be a perfectionist. Perfectionism is really a fear of not getting it right. And then they get plagued by the thoughts that they just won't measure up to other people. So I guess what I'm trying to get at is fear is normal. Use fear to motivate you, to move you forward, to remain alive. Use fear as a guide towards what's important for you. And as I said, to motivate you to take action, to improve your odds, to give you a chance to get ahead. Don't let fear hold you back. Well, thanks for spending the last little while with me, and I hope you got some benefit from this show. If you did, and you know somebody else who'd also benefit, please tell them about the Michael Yardney podcast. There's a share button on every podcast app. On Apple Podcasts, there's 3 little buttons down the bottom. Press it and share it, or just tell them about the Michael Yardney podcast. I hope you're going to be doing them a favour, and you'll definitely be doing me a favour and helping me in my quest to make as many people as possible financially literate. Now, there's ways of catching up with me between these shows. Just look for Michael Yardney on social media, or why not join my private Facebook group? Go to Facebook and look for the Property Update Facebook group. And I have a way of saying thank you to you for subscribing to this podcast. Go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where you can get a bunch of ebooks and reports. My way of saying thank you. And when you've got time, why not listen to some of the old podcasts? There's individual lessons in each of those that I think would be helpful for you. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?